The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
We might have seen some green on the screens today, but this whole week has been anything but smooth. So joining us now to discuss the crypto markets is Benoit Bosc. He is Global Head of Product at GSR Markets. Welcome, Benoit.
Hi, and good morning, and thanks again for having me. Certainly has been a very tough week in the market, and this relief rally is more than welcome. I think.
Yeah, I wanted to get your overall impression of how the market, beyond UST and beyond Luna, just the other currencies, particularly Bitcoin and ETH, how they reacted to this, to what happened, to this collapse. Do you think that it showed resilience? Did it show that there were some weaknesses and some sort of a problem in general? Or were some of these sell-offs not even related necessarily to the collapse of UST, but all part of a third exogenous variable, such as what's going on with the Fed?
Well, I think it started with the Fed, really, and you saw that over last weekend, where the concerns of the previous week over what the Fed would do and how quickly they would raise rates started creating all of this anxiety in macro markets and all risk assets. Then over the weekend, what's most liquid really is crypto. And obviously that's where people turn to for liquidity, and that somewhat kick-started this whole process. And that's where you saw the first sign of the UST Terra issue with the initial depegging. Now, I think what you're mentioning in your question is very true. We're seeing people refocus on Bitcoin and Ethereum, and you saw Bitcoin dominance increase and go back above 40%, which is, the part of Bitcoin in the crypto market. So it's going back as a crypto safe haven, if you want. I think Ethereum saw the same. A lot of the DeFi protocol, a lot of the altcoins were under a lot of pressure this week. They're rallying over 20% in some cases today. So it's pretty good to see that. And I think a good sign for the industry in general. But certainly, the theme of this week, as described by your previous host, was stablecoins, was what happened with UST Terra. $50 billion wiped out from the market. A lot of retail users affected, a lot of investors, crypto firms very affected. Obviously, we don't know how far the ramifications, the contagion, it will take like a few weeks or so to even get a sense of what actually happened. But right now, the markets, I think, are treating it as an isolated, case, and allowing for other fundamentally sound protocols to catch a bit of a break.
Do you think the Luna Foundation Guard buying up all that Bitcoin and then essentially lending it out to market makers and who we're assuming sold it onto the market for UST, is that what caused this collapse in price earlier in the week, and now we're seeing that kind of ease up and bounce back up?
I don't necessarily think that that's the issue per se. I think it's broader than that. And even if you look at the holdings, like obviously of the LFG, obviously they were significant, but it's not necessarily it is but one of the factors. I think what happened with UST and Luna has more to do with the broader sell-off, bringing both of those market cap closer together and allowing for, creating concerns basically about the backing of the stablecoin, which, as was previously described, really needed to be collateralized by Luna. And so as those market cap crossed, this was a pretty momentous event that led to the subsequent sell-off and the hyperinflation we're seeing now.
Your firm sees a lot of flows in general and can kind of get a sense of how the market is reacting to things. Anything interesting that came out of that? I mean, who's doing a lot of the selling? Who's doing a lot of the buying? That kind of thing. And when and how? I mean, what's the overall impression you got over the past week in terms of just from your perch?
It's been an interesting week for sure, and we've had a lot of people reach out, a lot of concerned parties wondering, who also were the weak points in the system. We are fortunately very well capitalized with strong risk management. A lot of people in our management team had traditional portfolio experience, even like me, were traders during the great financial crisis, which informs how we look at things and the kind of decisions that we make around those times, which still has a lot of opportunity, and we look to leverage this position. So we've been up and running and active throughout this time and trying to facilitate liquidity for all of our clients. We haven't seen any particular action. I think there is a lot of rumor and conspiracy theories about concerted attacks on the system, on that particular protocol. I'm yet to see a substantive evidence that this was the case.
Right, conspiracy theories are running wild. I wonder if you can point out to any trends like institutional versus retail, or just looking at the derivatives markets. How are traders positioning themselves?
So interestingly, because of this very rapid sell-off, we are in a zone in Bitcoin below 30,000, which has very little open interest. So 30,000 is likely to act, and that's what we're seeing today, as a stabilizer, as there is more options on that strike that will attract, that will kind of pose the market there, as there is more gamma. Below that, basically no man's land until you get back to the 20,000 region. So hopefully we get to stay here and consolidate and open some of those strengths that will help stabilize the market. For the other side of your question about retail versus institutional, I think you could tell from the volumes on all exchanges that this was pretty widespread panic, and hopefully we get to the capitulation level that will allow for this market to resume and also clean the house, like refocus on fundamentals. We have a lot of hidden leverage in the DeFi ecosystem, from composability, and where $1 gets traded many different times and might mean that the actual TVL that's captured from just this initial $1 in cash, maybe $5, $10, $20. So we need some of that leverage, some of that hidden leverage that's very similar to what happened with the credit crisis, like over 10 years ago, to exit the market a little bit, for things to be a little bit more sane. But right now, everyone's been active, and really, again, my thoughts really go out to retail users that were affected. There's a lot of very sad story where people have lost a considerable amount of their wealth, and really hope that everyone just stay the course and gets to rebuild, gets to do things different.
I'll try not to invest anything that you can't afford to lose, I guess, there. Benoit, we got to wrap it there, but thank you so much for joining us.